Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at Bitcoin, and we're going to start with our Elliott wave analysis and wrap things up with our basic technical analysis at the end of the video. We have two counts to look at. One is our completed expanding flat pattern into a wave 4, which suggests that we are now in a primary wave 5 higher, and one which suggests that we are still in a wave 4 in a zigzag correction. So let's start here with the expanding flat pattern first. We've been following this for weeks. If you haven't seen how this count has developed over time, please feel free to go back and watch the previous Bitcoin videos, but we're just going to summarize things very quickly here to bring us up to speed. Okay, so here's what we're looking at: 3 waves in an A, 3 waves in a B, 5 waves in a C. We can see that after we completed our wave A, our wave B came to 123.6% the extension of the A, which is very nice. And we can see that we came pretty much down to the algo target here at minus 23.6 and just wicked through it. This also coincides with just falling short of the 1618 extension of the A to find the C in this expanding pattern. And I will just show you that quickly as well. So from the peak to the low to this line here, we can see here's a 1618 46204 spot 60, and we just fall short of that. So overall, very happy with the way this expanding pattern has played out. We have the A wave, the B expands beyond where the A began, and the C completes beyond where the A completed. Brilliant. So let's come in and have a look at the price action off the low. We can see here on the daytime frame we've got a hugely bullish bar, really strong bounce off the low, which is nice. And if we just come down to the hourly time frame now so we can see more clearly what's going on here, we can see how I'm counting the move off of the low as a leading diagonal. 1, 2, 3, 4, 5 into what I've got as an intermediate one. Could be minor wave 1. We'll see as the wave degree develops. Zigzag down into a 2, and then another impulse wave we're working on currently, which could be a wave 1, as we do seem to have 5 minute waves on the way up here, or 5 smaller waves at least. You'll know better than I will by the time you watch this video, as it will be tomorrow. So you'll have more price data. But this move, initial move up in a diagonal, we've retraced exactly 50% of this initial move up to 53054 spot 55. I've just double checked that's right. We'll come down to this line here, which represents the bottom, and we'll come up to the top here, and yes, you can see here's the 50% Fibonacci retracement level. So a nice 5-wave move up in a nice bullish move off of the low, and a 3-wave pullback into a wave 2, and now we should be heading higher in an intermediate wave 3 and clear the all-time high within the next few days. Alright then, so that's how I see the flat pattern having resolved. We're now in primary wave 5. I think, well, I will say I prefer this count at the moment. It looks bullish, it looks good, I prefer it overall. But it doesn't mean it's necessarily right, it just has my preference for the moment. Now, if we move over and have a look at the alternative, here is the idea that the wave 3 finished in a ending diagonal, 1, 2, 3, 4, 5, and we've just completed the wave A down, and now we're working on a wave B up in 3 waves, A, B, C, and then we will fall lower in a C wave in what will be a zigzag. Now, this is not my preferred count, a couple of reasons. One, we have, in my opinion, a better all-round move with the flat pattern. Things count a little clearer, but also the B wave would have to extend pretty high if we're counting it as an A to here, a B to here, and that's how I'm counting it currently. We need to get another 5 waves up into the C of the B, and that's very deep for a zigzag. Now it can happen, but that looks more like the way a flat pattern would form, and we're counting 5 waves down, not 3 waves down. So if this is incorrect, we can't go beyond this point here. This is the invalidation point for our zigzag pattern at 64824 spot 45. So really this could get invalidated in the next couple of days. If we push higher and make a new all-time high, then this is invalid, and we will carry on supporting our bullish interpretation of being in a primary wave 5. If however we were to turn down violently and head lower in the meantime, then we'd have to consider this as a zigzag. So let's come in and have a look at the shorter time frame. So let's assume for a moment two options. One is the A is here, the B is here as I've got it, and this is a zigzag for the A. We have 1, 2, 3, 4, 5 waves up into A rather than a 1, and a zigzag down into a B rather than a 2. In which case we would be looking now to see a move up. 1, 2, 3, 4, I don't know, maybe this is going to be an extension of some sort. We're looking for a move up to find a C of a B, and then we would move lower in 5 waves down, so on and so forth, something like that. And we'd be looking for wherever the B finishes, we'd be looking to project the length of the A from the B to find our C. Okay, currently I've got it down here around 4122, but this is based off a slightly different interpretation, which is this: an A, B, C to here, and then we've got a wave 1 down and a wave 2 up. Now I don't like that because this is too impulsive off of the low, so if I'm going to have any support at all for this idea, I'm going to have to say A here, B here, and looking for 5 waves up into the C to complete the B to head lower. But like I said, here's the invalidation point at the high. This count is still valid, but it's not my preferred count. The flat pattern of being in a primary wave 5 higher now is now my preferred count. So let's see how things develop. If this count breaks down and we head lower, especially if we take out the previous low at 46999, then this count is wrong and we have to adopt the diagonal count and say that we are heading lower in the C. If we come up and clear this high at 64824, then we can abandon this idea of a diagonal into a zigzag into a wave 4, and we can fully throw our weight behind this bullish count instead. Right, so that concludes the Elliott wave portion of the video. Now let's have a look at the basic technical analysis and see what support we can find for the count and what potentially undermines the count. So let's remove the count from the screen for the moment, and let's move out to the weekly time frame, and we're just going to zoom in on the most recent price action like so, and then we're going to bring up our exponential moving averages. And we have 4 of them. We have a 10 in yellow, a 20 in blue, a 60 in orange, and a 250 in green. We have our volume profile on the right hand side showing the various peaks and troughs of the buy sell volume, the extreme of which being marked by the yellow dashed line, which is our point of control. We have an RSI set to a 10 close with a green level at 30 representing oversold and a red 70 level representing overbought. We also have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. Right then, what can we see here? Well, on the weekly time frame it looks good. Yes, we came down and transgressed through the 10 exponential moving average, but we reversed with a very bullish candle for last week, and we've had so far a hammer forming for this week. After coming down and wicking through the 10 exponential moving average, we found strong support and went up higher, and we now have this kind of hammer formation. So this doesn't necessarily mean it will close like this, as it is Thursday today. We've still got another day to go before the week closes out. So far I like the fact that we're still above all the major moving averages. I like that we had a nice bullish candle here after a correction. Now, we did see, leading up to this correction, we saw a high here, then we saw a higher high, then a higher high, then a higher high in price. But we saw in the RSI a high, a lower high, a lower high, and a lower high, and then we had this little jolt here. And now, at the moment, that bearish divergence is still in play. Although we've no longer set a higher high, and therefore we've basically seen the divergence play out in the short term, if we were to come back up and place another high above this one, and then have a downward reaction, that would maintain this bearish divergence. So what we want to see really is we want to see a sustained push higher here in price, taking out the previous high, and then we would like to see this RSI return to overbought conditions and clear these previous two highs, cancelling out that divergence. And the more highs we clear out of the RSI and the higher we get, the less any of this divergence matters. It can just disappear over time. We would like to see the same with the MACD, the short-term moving average to cross over the long-term moving average. At the moment we have these 3 red bars on the histogram showing an increase in bearish momentum, and the blue short-term moving average is still moving downwards and has not reversed to the upside yet. So we would very much like to see that short-term moving average to crossover and bring in some green bars on the histogram and support price higher. So although we have a count that we like the look of, the basic analysis is not particularly bullish or strong at the moment. The candle formation is nice. The sustaining above the 10 exponential moving average so far this week is also nice. But we need to see confirmation in the RSI, and we need to see that crossover on the MACD as well, and then I'll be much happier. Let's come down to the daily time frame now. On the daily time frame, got a little doji candle for the day so far. Obviously it's not closed yet, so we don't know how this is going to end up. Above the 10, above the 20, above the 60, above the 250, both the 10 and 20 exponential moving averages are now back above the 60, with the 10 having crossed below it previously, and the price above all three major moving averages. This is fundamentally bullish for the time being. We can see that we did have a cross back over into bullish momentum on the MACD on the day time frame, with the short-term moving average crossing over the long-term average. These green bars on the histogram. A little dip here with this sell-off into what I have proposed is a wave 1 into a wave 2, and now I return to bullish momentum again. But same as in the weekly time frame, we want to see the RSI push higher and cancel out some of these previous highs back here, here and here. If we can get rid of these highs on the RSI, push back into overbought territory with the price breaking to a new high, we can get rid of this bearish divergence that's been in tow. We'd like to see a move back into positive territory here above the zero line on the MACD and push higher above these previous highs in the MACD. This bearish divergence has been very, very strong. We've seen high, higher high, higher high, high, lower high in the MACD and the RSI. So this leaves me a little concerned from a longer term point of view that perhaps this could be the start of a greater down move. Hence why we're still entertaining that zigzag pattern, because to be honest, for the moment, until we see a return to more bullish momentum on the MACD and the RSI in both the daily and weekly time frame, with price confirming or momentum confirming price, until we see that, the basic analysis is still supporting being in a longer term correction, is still supporting that diagonal count, even though it's not my preference. So that's really what we need to see, guys. We just need to see a sustained move higher to a new high and momentum to support it. If we see a breakdown from these levels, and a considerable breakdown, then the momentum remaining negative on the MACD on the weekly time frame that we saw would support the idea of that diagonal pattern heading lower. And I think we are on the diagonal, no, we're on the flat chart, so would support this count, is what I'm saying. So we just need to keep seeing it impulsing up, basically. Right, guys, that concludes the video for Bitcoin. I hope you've enjoyed it. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like button, hit the little bell notification icon to remain informed of future videos, and feel free to leave us a comment in the comment section below if you want to. Now, before I go, I'd like to thank my patrons as always. Your support is greatly appreciated. If you're interested in becoming a patron, there's loads of great deals to look at. Follow the link to my Patreon in the description below and have a read of the tiers, see if you're interested. Also, if you're not following me on Twitter yet, I also have a link to my Twitter feed in the description box also. Alright guys, take care, and I'll be back with you soon. All the best. Bye bye.